Good morning and welcome to the Monday 22nd of March Smart Financial Planning Review of the Weekend Papers. All the papers are concerned this weekend about making sure you've taken every possible advantage you can before the conclusion of the tax year. So there are three massive things that you need to think about. Firstly, as of April, there will be a new 50% tax rate that will be applicable to all earnings above £150,000. If this is a category that you're going to find yourself in, you may wish to think very carefully about awarding yourself an additional bonus, an additional dividend payment, making any efforts that you can to draw money into this tax year where you'll pay tax at 40% as opposed to the next tax year where you'll pay tax at 50%. And if that's not enough of an incentive for you, the national insurance arrangements are going to change as well. So they're going to go up by 1%. So anything that you can do to bring money forward into this tax year and pay your tax at 40% rather than leave it to the next tax year and pay it at 50% above £150,000 is a fantastically good idea. The second thing, and we keep banging on about this, it's a use it or lose it option with your ISA allowances. Excuse me, assuming you're over 50, £10,200 per person is available before the end of the tax year. If you're under 50, it's still £7,200 per person, but then that will increase after the next tax year. So take your opportunity to shelter some money in there, whether it by cash or shares, whether you just rearrange your existing investments. Make sure you don't lose the opportunity to have this. And finally, although time is very, very, very short on this, you still have the opportunity, if you're in this age bracket between 50 and 55, to release money from your pension, because as of the 6th of April, the earliest age that you would be able to draw anything from your pension will be age 55. So if you're in this bracket and you were planning to take your pension income before you were 55 and you're currently over 50, you have approximately a fortnight at the very latest to get this sorted. You need to speak to your advisors immediately if you want to even give consideration to this. If we're your advisors, then I would suggest to you respectfully, if it's any time after the end of this week, there's probably no chance of us being able to do anything for you at all, and realistically, you would almost certainly need to be in touch with us in the next couple of days. So that's your three big things. Pull all the income you possibly can into this tax year, make sure you maximise your ISAs, and if you are planning to take anything out of your pension before the end of the tax year, in order to buy it in before you become 55, you better get on the move very, very quickly, because otherwise you're going to miss your opportunity until you're 55. That's us for this week. Look forward to speaking to you soon.